What's going on, my friends? Chris here. I want to bring you all an update today of Bitcoin. Right now we're sitting at $22,900. What I want to do is take a look at Bitcoin on the monthly time frame, and then we're going to get all the way into the 1 hour time frame. So we're really going to get some detail on Bitcoin, what's taking place on the bigger scale, as well as the intricate details that we get from that 1 hour time frame. So if you guys get some from these videos, don't forget to like, subscribe, hit that notification bell. I'm going to talk to you today about what my plan is for Bitcoin and what I've been doing here recently. So let's dig into this. So first of all, guys, the main thing that I'm doing right now, I am still sitting back, patiently waiting in cash. And, you know, this has been a great exercise for me. There's a point at 17,000 I wanted to enter. It was $17,300, but I didn't pull the trigger, and there were reasons that I didn't pull the trigger. But for me right now, I still believe caution is the way to go in this space. We've had a beautiful move of 40% or more, and I just believe, guys, there's going to be some retracement coming soon. And the reason why I'm going to talk about this is we're going to get into the DXY today, and we're also going to get into the VIX today. And in the VIX, I'm seeing a lot of complacency in terms of the equity markets as well as the cryptocurrency markets that can give us a little bit of a clue. So we're going to get into that after we get into Bitcoin today. And I hope that'll show you guys a little bit why I'm just being more protective and more cautious. I'm not shorting Bitcoin. I'm just staying out of the way, essentially, guys, because right now we're still trading below our 200-week moving average, and we're trading below our 50-month moving average right now. So we're basically fighting at this range here, and that's going to be at $23,200. I would like to see a monthly close up above that. This also would be a bullish engulfing candle if we can end up closing the way that we are now, and that would be on heavier volume, so that's a good thing. We just still have a lot to get over top of here, and the main thing that I want to show you is on the 1 week time frame for Bitcoin. So you can see we're getting up into this area here. This could be a major spot of overhead resistance. So we have our 200-week moving average, and that's going to be at $24,739. And then we have our 50-week moving average, and that's going to be at $25,621. And you can also see this big red order block here. So what I have up on the screen is an order block detector. It's by Lux. And this is an area that a lot of guys have shorts right up in this range. So it's definitely something that you want to look at, guys, and this would be right at around $24,500. A lot of shorts are lined up right now. So it's something I keep an eye on. It doesn't mean for sure there's times when you can bust through these blocks, but right now this is a major overhead resistance area that we have to pay attention to. If we get into the 1 day time frame now, I think the best case scenario for Bitcoin and what I'm excited about is the move that we had. And the reason for that is because we have room now to really come back and retrace and set a nice higher low, potentially on top of this 200-day moving average, which would show strength. You know, guys, it's always possible that we have a full retrace, but I would still anticipate with all this sell pressure up here, we may push up $24,000, $25,000 or so, but I still see a lot of selling pressure in this range. We basically took off from the low of 16,200 and went straight up. We've had a little bit of time consolidating here, but still we haven't had much of a retracement. So we got to keep our eye on that, guys. And typically when you look at these moves here, so we're just going to go from the start of that move, get a little micro fib on this. So even back to the 0.382 would be healthy. That'd be at $20,958. And that would show that we potentially would have the strength to get up through a block like this if we retrace back down to that area. If we get down into the 0.5, that's going to put you at 20,000. If we get to that 0.618, which we commonly go to, that would put you back at around $19,173, which would be below this 200-day moving average, which we've talked about. We want to see a nice bullish candlestick pattern, a support pattern off that with some good volume if we do retrace down into this range. But say we do go back down to the 0.618, guys, that could be a 16% drop or so. So I'm not saying it has to happen. We still could get one more leg up into this range. But when anything moves this fast, guys, it's going to have to calm down. It's going to have to digest. This is a heck of a move that we just went through here. And we've been in a bear market. So that's a 46% move. So I would still anticipate some retracements. And you can see a buy order block right in this range. It's going to be at $18,200. And then below that, you'd have the 16,000 and then another one at around 15,700. But you can see this big area up here. And I do believe there's going to be some guys who are going to be shorting at that range right now just because of how overextended we are. For me, guys, I don't really want to step in front of the Bitcoin train because there's times when it looks like it can go down and it still can pump up another $3,000, $5,000. So for me, I'm not in that business. I'm in the business of patiently waiting for a great bullish long opportunity for more of that position trade is what I'm looking for, that big swing trade. If we get into the 4 hour time frame, 4 hour time frame, we are coming up into some selling pressure here. So you can see this long wick. We shot up to around 23,800 and have seen some pretty good rejection there. We tried again, saw more rejection. So we are holding on the 4-hour time frame, this 50 moving average, this 100 and the 200. So I would just watch these areas. If we do get a retracement, see if we can get any bounce off that. You can see a little order block here at about 21,867 is an area. Then if we get into the 1-hour time frame, we step back here, we are still holding our 200 moving average even on the 1-hour time frame. So guys, even just playing that, when you get up above the moving average or the 200 moving average and starting to curl to the upside, when you're moving sideways and you're just chopping back and forth, it's irrelevant. You really have to start seeing this curl to the upside. So say you even got in on a move like this here. So guys, this is probably the one I was looking at. It was around 17,300 and I did not pull the trigger on it. So that would have been right in this range when I saw some volume coming in right there. But let's just go from that range here. So say you did get in that range, we're up above our 200 moving average on the 1-hour time frame. This is just a little shorter strategy that I would like to do here, guys. So we would still be in the trade because we have not broken down through that 200 moving average, and that's 25% right now. So now what you would do, you would let it ride until you see a confirmed candle close, a big strong bearish candle with some volume below this 200. Then you'd sell out and you'd wait for the next opportunity to do that. So always remember, when you're playing these moving averages, it's great when you get up above them, but you also want to see them start moving to the upside, curling to the upside or curling to the downside. That's a big factor for you, just really watching that. Now if we step back, we're going to get into the 1-day time frame and we're going to go into the VIX first. And the VIX right now is at 1850. So we are really low here, guys, and typically if you compare this to SPX here, it's the inverse. So we've gotten even lower than we did here, and this was in in August 2022. So if we go to SPX now, August 2022, and we take a look. So August 2022, look how high we got up into this range here, guys. That's pretty incredible. So it's the inverse. So whenever there's a huge move like this going to the upside, guys, and we take a look at that, and we flip back to the VIX, and we take a look at August, we got down to around that 1819, and typically that's when we reverse, and then we start going back to the downside. So whenever we get up high into these ranges of 35, 40, those type of areas, you always want to pay attention. Then also when we get down into this 18 or so, this could be a big range of support, and typically when we find support off there and the VIX gets moving to the upside, equities are going to drop. So just kind of that inverse, but something I'm paying attention to. This could be a big support area for the VIX. And if you go back and you look at equity bear markets, typically, I believe, guys, it's always been we don't end a bear market unless we go over around 48 to 50 on that VIX. And you can see for the COVID dump, when we had this back here, we ended up going as high as 85. And right now being at 1850, I believe there's a lot of complacency in the market, and I do believe that we're going to have some potential downturn coming in the next weeks to come. And we also have the FOMC meeting that we have to pay attention to. And with the stock market up a little bit higher, that may give even more incentive for Jerome Powell to hammer some things and maybe even pull out, do some more of that quantitative tightening that people aren't paying attention to, where money's getting pulled out of the system as opposed to that quantitative easing that money's getting put in. So it's something that we got to pay attention to, guys. Right now, a lot of complacency on the VIX. If we get into the dollar as well, and we take a look, guys, dollar's really been beat up here. So right now we have had a MACD cross to the positive. Relative strength is going to be at 35. But this is an area of support I have been watching here, and this is going to be at 101.27. So also, if the dollar here, since it's retraced so much, if we can start getting some type of a bounce out of here, I'm not saying it's going to be a trend change back to the upside, but if we can get a nice move to the upside on the dollar, that also could put more pressure on the equity market coming up, which could put more pressure on the cryptocurrency market. Another one I like to look at here, this shows us the order blocks a little bit better. UUP similar to the dollar. But you can see these buy orders right down in this range here. This order block here, and then you can see some sell order blocks up there. But essentially what I'm saying, guys, is if the VIX gets moving to the upside. The dollar gets moving to the upside a little bit. It's going to put pressure on equities. If there's pressure on equities, most likely that's going to put pressure on Bitcoin, which has already ran up 46% in about a month or so. So what I'm saying is I would be cautious in these areas right now. I'm not jumping into Bitcoin shorts, anything like that, but I'm going to sit back and be patient, wait for that nice retracement, and I want to see that good buying pressure come back in off key areas. That's what I'm looking for. If you get some from these videos, don't forget to like, subscribe, hit that notification bell. God bless you all and have a wonderful weekend.